Good afternoon. The second quarter and first half of the year is coming to a close, and all we have to say is adios, sayonara, hit the road, Jack. We're preparing our halftime report, which we'll be releasing in the next couple of weeks, so stay tuned for that.
Well, this just happened. Must be nice to have a chuckle as a panelist at a fancy conference.
I think we now understand better how little we understand about inflation.
That's not very reassuring.
That, of course, is Fed Chair Jerome Powell, whose net worth, by the way, is somewhere in the $50 million range. So $4 and $5 gas must be pretty funny. But as inflation rolls on and every day more people are lining up on Team Recession, let's take a look at what we see going on.
This is exactly what we see going on right now, the Mexican standoff. A lot of things are really pretty good right now. Job market, job openings, corporate earnings, consumer spending. But as we looked at it during our recession redux video a few months ago, these data points are the last to fall, brought on by recession. They don't lead up to it. At the same time, the Fed is trying to tame mainly supply-driven inflation by raising rates to hopefully reduce demand.
And not only that, things like consumer confidence is where it was during the tail end of GFC, global financial crisis in 2009. During that time, we had major banks going bankrupt, a near implosion of the entire financial system, everyone losing their homes, rampant foreclosures and bankruptcies. And now, airplanes are full, restaurants are full, sports and concert venues are full. And yes, this could be the last gasp before the crash that everyone's predicting, but at this point at least, where we are now compared to 2009, with consumer confidence being the same, again, produces this Mexican standoff predicament.
That's the Mexican standoff as it applies to the economy, but how does that more specifically apply to the stock market? We promise not to bore you to tears. What's the most common way the stock market is valued? The good old PE ratio, price to earnings ratio. The higher the PE ratio, the more expensive the stock market. Look at the historical PE ratio. So you can see a lower PE ratio compared to 6 months ago, and it'll be even lower after June's officially over. But what does this PE ratio really mean?
Simple example. ABC company is $100 per share. That's the P. This company has earnings of $10 per share. That's the E. P over E, 100 over 10, equals a PE ratio of 10. Now let's say the company's doing okay and the E, earnings, stays the same. But for some reason, people are willing to pay more to own the stock. That makes P go higher. So the price goes from 100 to 120. I'm happy, I have a 20% gain in my stock, but my stock's PE ratio went from 10 to 12, which means my stock is more expensive and arguably less of a value.
And what's happened this year is E, earnings, broadly have actually gone up, while P, price, has come down, producing a lower PE ratio. So the Mexican standoff is that while the market may be fairly or even a little undervalued right now, everyone is expecting the E to come down when the recession hits. And if E comes down, that will make the stock market overvalued. So everyone's bearish, not because the market is currently overvalued, but because they expect it to be overvalued in the future when the recession hits and jobs are lost. Consumption is squeezed, etc. Hence the Mexican standoff.
Speaking of PE ratios, want to hear something funny? So these stocks are commonly referred to as the Super 7. They're among the largest holdings in the S&P 500, NASDAQ, and so forth. Look at how much the price, P, has come down. 20, 30, 40, 50, almost 60%. So much that Facebook, now called Meta, this Merlot colored line here, has been added to the large cap value index. No joke, Facebook, Meta, is now a value stock. The 5th largest holding in the Russell 1000 value index. Who else is in there? Google, now called Alphabet in green here, top 25 holding in the Russell 1000 value index. And yes, even Netflix, not pictured here, but down 70% for the year, is now also a value stock. So at your 4th of July barbecues on Monday, you can tell your friends, hey, can you believe Facebook, Google, and Netflix are all value stocks?
All right, let's take a quick look at the economy, starting with regional GDP. We're used to seeing the national number, but here's the state-by-state breakdown. Generally, it looks like the bookends of the country fared the best in Q1 of this year, while the middle was a laggard. Also, kudos to Michigan and some of the New England states for eking out GDP gains for the quarter.
Gasoline prices finally coming down. This is not a perfect relationship for the price at the pump, but at least the core commodity gasoline price is coming down. But still a long way to go, as we're only back down to prices seen about a month ago.
Something else we don't talk about that often, but it's why you have to take every historical comparison with a grain of salt. This is energy spending as a percent of income. Even with these high prices, in May, the level of spending on energy was still only half the level of 40 years ago, and lower than it was for most of the 90s.
Rates for shipping a 40-foot container from Shanghai to Los Angeles, we've looked at this in the past year, has fallen by 38%. Although still elevated compared to pre-COVID rates, this trend is going in the right direction.
House listings finally rising for the first time in about 3 years. There's another Mexican standoff dynamic there, where a lot of folks have large gains, but where would they move to? Are there still more gains if we wait? But mortgage rates are way higher, and is there a recession on the horizon? If we wait too long and there's too much supply, that will lower our selling price. Mexican standoffs everywhere in the economy.
Annual growth rate in U.S. corporate profits or earnings, the E we were talking about earlier, still high, higher growth than the last 10 years, and give or take where they were during the 90s. Exceptionally strong markets during both those times. Again, everyone is thinking this line is going to keep coming down in the future, which would likely drag down P, price, the stock market along with it. The Mexican standoff.
Quick look back at what almost seems like a different world from today. The White House was celebrating the cost of a cookout being down 16 cents in 2021, while this year the cookout staples, ground beef, chicken, and so forth, are all up by about a third.
Despite the higher price tag, we wish you a happy and safe 4th of July. Despite the many challenges facing our country, we hope to carve out some time to reflect on the amazing freedoms and opportunities we are blessed to have in America. See you next time.